Hey everyone, and welcome back to the channel. Today we're going to talk about Elon Musk's investing advice you should follow. Let's get right into it. Elon Musk, CEO of Tesla, is the richest person in the world. Therefore, it is not surprising that he is frequently asked for advice on how to increase wealth. On May 1st, he shared his investment advice with his over 90 million Twitter followers. But what are those? Let's list them out. Number 1. Invest in stocks you believe in. There are a few key components to the premise. Observe that Musk advised in investing in many companies' stock. Investing in numerous stocks is a sensible strategy, even though he didn't specify how many. The billionaire investor also offered his advice on which stocks to purchase. With a stress on the word you, he advocated investing in firms that produce goods and services that you believe in. On this front, Musk has put his money where his mouth is. Tesla accounts for the bulk of his wealth. Even Musk's critics must admit that he appears to have a sincere faith in Tesla's electric vehicles and solar panel systems. Tesla's stated corporate aim to speed the world's transition to sustainable energy appears to be firmly in the hands of CEO Elon Musk. Twitter acquisition is also a good fit for him. Twitter's potential is clearly valued by Musk, despite Musk's earlier criticisms of the company's policies. Other Musk investments, such as the privately held SpaceX and the Boring Company, are in line with this attitude. Number 2. Only sell if your original premise changes. When it comes to making money on stocks, it's all about making appropriate purchase and sell decisions. Both of these decisions must be executed appropriately in order to generate a profit. A stock can be purchased easily, but selling it can be changed. It is possible to miss out on gains if you sell too early and the stock rises. If you wait too long to sell and the stock falls, you may have lost out on a good deal. What are the options for an investor? Musk advised to only sell stocks when the products and services of the companies that you invest in are trending worse. In other words, sell when the fundamentals deteriorate. The fundamentals of a stock may worsen for a variety of reasons, including slower earnings or revenue growth, more competition, higher expenses and reduced margins, or value. The first indication of deteriorating fundamentals may come from a company's quarterly earnings report or, on occasion, from guidance issued in advance of reports. The market's response to unfavorable company news, such as an earnings miss or lowered forward guidance, is typically rapid and unequivocal, and the stock price is likely to fall by double digits. The investor must then decide whether the deterioration in the fundamentals of the company is temporary or permanent. Due to the difficulty of this endeavor, it may be advisable to sell and abandon the position before determining if it should be repurchased. Number 3. Don't panic. Musk's third principle is consistent with his second principle. He urged investors to refrain from panicking when the market does. That's excellent advice. In response to a decline, a hasty decision to exit the stock market or sell shares is rarely the best course of action. Instead of panicking, prudent investors recognize that market fluctuations are inevitable. They persevere by adhering to their long-term plans, taking the time to comprehend the current circumstance, and making only deliberate, well-considered moves. Expect that significant market changes will always occur and that it will always feel different this time and unexpected. It is not unusual for the stock market to drop 3 or 4% one day and then rise 2% the following day. You should also consider the future. The most successful investors over time are those who have long-term objectives and don't get caught up in daily or weekly market fluctuations. Develop a strategy investment plan that considers where you want your investments to be in 5, 10, or 20 years, if you haven't already. Your investment strategy should be a source of comfort, not anxiety, even during volatile times. If it causes anxiety, something is wrong. All of this advice sounds familiar. Well, because it sounds a lot like Warren Buffett's strategy. Musk's tweet echoes the principles of value investing made famous by Buffett, currently the 7th richest person in the world. In tweeting, "Don't panic when the market does," Musk also echoes one of Warren Buffett's most famous quotes about not following the crowd, even when the market is down. Be greedy when others are fearful, and fearful when others are greedy. In March, Musk also tweeted that in times of high inflation, it is generally better to own physical things like a home or stock in companies you think make good products, rather than keeping your money in cash. However, he added that, "I still own and won't sell my Bitcoin, Ethereum or Doge," in reference to his cryptocurrency holdings. However, Buffett, who once described Bitcoin as probably rat poison squared, stated at the Berkshire Hathaway annual shareholders meetings that he would not invest in cryptocurrencies despite its rising recognition because it's not a productive asset and it doesn't produce anything tangible. So it's safe to say that their outlook on investing is still somehow different. That's it for today. If you guys enjoyed the video, make sure to hit that like button. Don't forget to subscribe and turn on that notification bell so you never miss out on any future content we'll produce for you guys. We're signing off now, but we'll be sure to catch you all in the next one.